my name's Sophie Bakalar. I'm a partner at Collaborative Fund, and I invest in everything from consumer to climate to different types of energy transition companies.
Tell me more about Collaborative Fund. What's your story? Where did it all begin?
Yeah, so I joined Collaborative Fund back in 2015, but the fund predates me. It was founded by my partner Craig Shapiro back in 2010 with the belief that mission-driven or values-driven founders were going to be the big winners in this next phase of the next phase of the world, where younger consumers were making up a larger and larger percentage of the global economy, and their purchasing decisions and the drivers of their behavior were going to be quite different than their parents or grandparents. And so they were going to be, purchasing products and services from companies that more closely align with their values. So that's the underlying thesis and has stayed consistent for the past 15 years.
So can you give us some more numbers, like how many funds have you raised, how much have you deployed, any sort of highlights in terms of success stories maybe?
Yeah, absolutely. So we are about to activate our 6th flagship fund, and that's a $125 million vehicle. And we have a number of thematic funds as well. So in addition to that sort of generalist seed fund, we have a more growth-oriented climate fund, and some other, again, sector-specific funds. Bunch of success stories that I'm excited about, everything from seed and Series A investments in companies like Olipop and Speak AI to Sweet Green, Reddit, Lyft, Kickstarter, Commonwealth Fusion System. So a range of companies across sectors, all with that underlying thesis of companies that are doing good for the world, but also growing and scaling and thinking about maximum impact, both in terms of doing good in the world, but also economically.
Because you mentioned when we were speaking earlier that climate was sort of a relatively new focus area. Tell me, why did you guys think about doing something bespoke initiative around climate tech?
Yeah, I mean, we weren't necessarily thinking about climate as a standalone strategy back when I joined. It was more, investing in the best entrepreneurs, doing the biggest, most ambitious things that they could do. And it just so happened that I think a lot of really talented founders, even before we started calling it climate tech, were innovating in the climate space, because it was an area that I think they saw there was tremendous opportunity, but it was also very personal to them. And so when we first started making investments in companies like Sweet Green or Commonwealth Fusion, it was, I think, not trendy or popular to call that climate investing. They were just great investments that we were excited to make. And now that's evolved into a standalone strategy where I think we feel similarly that there's just a once in a generation opportunity to invest in the energy transition, and that a lot of the best and brightest founders are innovating in this space, and so we want to back them.
So focusing on the climate or green tech investments, what is your thesis there? What are you looking for? Like what stage, what sort of traction, or what else are your green flags, I suppose?
Well, we'll invest in anything from seed all the way up to Series B. And in terms of specific sectors, we tend not to think that rigidly about what falls into climate or energy. It's much more about how do we find companies that are doing good in the world and pushing the world forward, but are not asking their customers to make sacrifices. That's really a core theme within Collaborative Fund. We have this framework that we call the villain test, which is a test before we make an investment where we ask ourselves, would a villain use this product or service? So sort of the top of the funnel filter that we use is this company doing good in the world? Is it pushing the world forward? But before we make an investment, we have to answer that question, would a villain use this product or service? And that's our way of ensuring that these companies can really provide value to customers without things like green premiums or subsidies or external factors. They have to really be providing a cheaper or better product or service.
So if I'm a clean tech or green tech company that kind of fits that mold, how do we get in front of you? What's the best way to get up on your radar? How do you normally source your deals or
Yeah,
companies?
Being 15 years into this at this point, a lot of our deal flow, as we call it, comes from founders that we've previously backed or folks in our network who we've gotten to know over the past decade plus. I always love to meet founders who know other founders that are in our network, but I'm a big proponent of cold outreach. So if you can't get a warm intro, cold is better than nothing. And so I think it's very easy to find our emails, but there's also LinkedIn or Twitter or any other, we're everywhere. So anywhere that you can reach out, we encourage you to do so.
So you must have seen a lot of pitches then over the years. Do you have some examples, maybe good, bad, and the ugly, or what it takes to kind of get through to you guys?
Yeah, I mean, I'd say the biggest mistake that I see is founders coming in without a really, really clear understanding of the market and the competition and who is innovating in their space, both in terms of incumbents, but also other new entrants to the market. So that's one thing I just always encourage founders to spend some time on before they come into the room with a VC who's going to grill them. Just make sure you know who else is working on the same problem.
Makes sense. And what are some bad examples, I guess, of things that you've seen that, apart from ignoring your market or competitors, do you have some horror stories?
Not too many. I mean, I feel like there's such a range in terms of what these kind of pitches look like, particularly at the early stages. Sometimes we're the first folks that an entrepreneur is meeting with, and they've never done this before. And so there's a lot of leeway that you give in terms of what you expect that kind of presentation to look like. But I think the only other horror stories I've seen would be co-founders kind of going at it or fighting in the room. So I guess another thing to watch out for is, your investors are always on the lookout for what the personal dynamics are among founders.
Makes sense. And what about good examples then? So knowing your competitors, knowing your market, having good team dynamics, anything else that usually stands out for you?
I think a founder who can really just have a conversation with you and it's very fluid and doesn't necessarily involve very rigid slides that you're walking through specific talking points, but can really, engage you in kind of a natural way that always stands out for me, because I think, it's so much better to be able to have a conversation versus being spoken to about what someone's idea is.
Okay. And zooming out a little bit and thinking about ESG or climate tech in general, it feels like it was sort of a new thing 10 years ago. It had some momentum, became a little bit more trendy. And perhaps now some people even suggesting that it sort of peaked almost, that ESG is no longer a focus that investors are seeking out and people are pulling away. How do you feel about kind of having been in the ESG space or still have an interest in that, given what's happening in the world around us? Is that making you question focus, or does it make you more committed to pursuing this? Or what are your thoughts in general around trendiness as it relates to ESG in general?
Yeah, it's such an interesting time to be investing in climate. I mean, we don't think of it as ESG investing because, again, we really feel like there's tremendous economic opportunity here. And so it's not just about, fitting rigid quantitative metrics around how to achieve impact. We really feel like there is kind of this generational shift that's happening and that we wanted to be part of that. But you're right, there are a lot of both tailwinds and headwinds right now. I think public sentiment is kind of has peaked and fallen a little bit. Government support has peaked and fallen a little bit. But frankly, when I first started investing in climate, I always said there was going to be a point when we would not call it climate anymore, because every company would be a climate company. It would not be a standalone category that we were investing in. And I think we're actually approaching that, because while there aren't as many companies that are calling themselves climate tech companies, there are so many other trends that are happening right now that are actually extremely supportive of climate innovation. Everything from onshore manufacturing to the industrial transformation that we're seeing to the massive builds around data centers and AI innovating around some of the materials. There's just tons and tons of trends that are actually really supportive of moving much faster in climate innovation. So I think we're going to get to a point where we just don't talk about climate tech investing anymore, because it's sort of part of everything, in the same way that you don't really talk about investing in the internet anymore because it's part of everything.
True. You mentioned the government policies. So what are your thinking around Trump and the incoming administration when it comes to putting a halt to government grants and incentives, specifically set up to help increase this adoption around clean tech or climate tech? good or bad, or is it healthy, kind of a cleanup, shake-up, or?
I think it is healthy, to be honest. I mean, this is one of the reasons why we have the Villain Test at Collaborative Fund. It's because we want to invest in technologies that, get cheaper and more accessible as they scale. I think this notion that, you can't be successful in climate tech without a green premium. History shows us that the best technologies get cheaper over time, not more expensive. And so I think finding those spaces where we can survive without subsidies, that's where I'm most excited. But there are a couple caveats to that. The Trump administration, while they're not providing as much federal support to climate companies, a lot of the grants that have gone into climate tech have actually been at the state level, and don't anticipate those going away quite as easily. And there are a lot of advantages from the Trump administration. I mean, they're very, very pro-deregulation. That's been a huge bottleneck to deploying a lot of climate infrastructure over the last few years. And so I think there will be certainly some disadvantages over the next couple of years, but there will also be a lot of things that move faster because of the Trump administration. Areas like nuclear, for instance, where I think they're a lot more supportive than the previous administration.
So looking ahead then, and sort of wrapping up and finishing on a positive note, why is this a great time to be an investor in climate or impact, or an entrepreneur in climate and green tech?
Yeah, I think it's an exciting time in that there are big inflection points happening in the underlying technology. AI is making everything, I think, a little bit more, making everything move a little bit faster and enabling a lot of growth in these technologies that I think are creating, big opportunities for investment. I do think deregulation is probably going to be a big accelerant to climate innovation, which is exciting. And we are still seeing a lot of the best and brightest founders want to work in AI and climate. Those are kind of the two big sectors right now. And so get to work with some of the smartest people in the world. I think and get to invest in some of the smartest people in the world. I think that's very exciting.
Excellent. Thank you very much for sharing your thoughts with us today.
Thanks so much for having me.